Hi everyone, welcome back to Mom Wester channel. As usual, every Thursday I'm going to share my trades. So today I have picked up a few trades that I've placed on options because for the past week there is major volatility movements in the US stock market. That's why I have actually placed a number of options trade because of the volatility index. And today I would like to share with you a few trades that I've placed. Without further ado, let me go through the trades. Share. All right. So the first of all, I would like to make a disclaimer. So this is not a recommendation to buy or sell shares. It's just a video for me to share my investment journey. So the first trade that I would like to share with you is this counter, Fastly, FSLY. Well, I have a bit of regretting placing this trade, but maybe just let me share with you the whole trade position first. My entry price was at okay, I actually entered on 16th of October. I sold a vertical put. That means I sell 60 put and I buy at 45 put. Expiry on the 20th of November with $75 premium per lot size. So when I entered, the share price was actually close to $84. And right now, the share price has dropped to $73, which is exactly at a Fibonacci level of 50%. So if the share price drop below this Fibonacci 50%, I may consider to cut loss. I may want to just cut loss at 50% loss, right? So let's go through the chart. So there was actually a huge gap down this day because Fastly, the main client is actually TikTok. So TikTok actually has a dispute with US, right? That's why there is a huge drop here. And when there is a drop here, I actually sold a vertical put very far out of the money, which is $60 put somewhere here, very far. I thought it's very far, but it's getting closer in the money. But I have drawn a Fibonacci line. So 50% is actually exactly here. So the price actually dropped exactly to 50%. Let's see how it goes. If it break below 50%, if it go towards to 61.8%, which is here, that is where I need to cut loss, or I may want to cut loss. So because, because the premium that I've collected is $75, right? So if let's say my P&L is at the position of loss of $140, that is where I need to cut loss already. Okay. All right. So the moral of the story is wait for it to retrace before we actually enter a sell put. It's actually better to wait for the price to retrace. So yeah, that's a blind spot. Because when I trade this position, I thought I want to collect premium, the urge to collect good premium at a very far out of the money, but it's getting closer into the money, but let's see how it goes, right? Okay, so for Zoom as well, I actually place the same trades okay, Zoom I placed on the 13th of October. I sold a vertical 350 put and buy at 330 put. So the same expiry date, 20th of November, with $125 premium per lot size. So I have actually closed this trade on the 27th of October. Today is 28th of October. I closed this trade yesterday and collected $100 premium. So I let go the $25 premium. If I want to collect the whole $125, I need to wait until 20th of November. Since I have made almost close to 80% of profit already, so I decided to close and collect $100 premium and move on to another better opportunity. If I can see a good opportunity, I just move on with my capital. So the entry is because of high implied volatility. So the share price, when I was entered on this day, the share price was $518. So I thought $350 is actually quite safe. All right, so this is the safe price point, and it actually continued to goes up. So yeah, let's see. I actually for Zoom, I actually place a number of times of sell put for Zoom, and every time I'm happily collecting premium. So I may consider to continue to look out for opportunities on Zoom whenever I feel that whatever capital that I being locked in to place a trade, if I can get 10% return on the capital that I've being placed on this particular trade, I will just enter a sell put, very far out of the money sell put. So the next one is Etsy, counter ETSY. Same, on the 16th of October, I sold vertical 110 and buy 90 put with expiry of 20th of November. Each lot that I place, I managed to collect $111 premium. Why I place this trade? Because of the high implied volatility, same reason. The share price on that day is $146 when I place the trade. And right now, the trade is running at a profit. I may want to just take a 70% profit. That means out of 111, if it reach like maybe $80, that is where I want to take profit and then look for another trade. That's how I usually trade options. But if let's say share price plunge because of because of this presidential election, so maybe I may need to cut loss at 50% loss. Let's see how it goes, right? So I actually entered here. Then the share price actually adjusted where I have suffered some negative P&L, right, on these particular trades. But right now, it's back to positive P&L. So let's see how it goes, right? Right now it's running at a profit for this particular trade. Okay, the next one I would like to share with you is Beyond Meat, counter BYND. So for Beyond Meat, I placed a trade on the 16th of October. I sold a vertical put, $140 and buy back $130. Buy put 130 strike, and the date of expiry is 20th of November with $115 premium for each lot size. The reason I place is also same due to high implied volatility. Share price was back then $190 when I placed the trade on this day. So if it hits 70% profit, I will take profit happily. If not, otherwise, cut loss at 50%. Ta-da! So I waited and waited for a chance to enter a sell put. Finally, it retraced, it pulled back down. So I thought it's a good day to enter. And because this day when I enter, I was being blindsided by the high options premium because I buy I sell very far out of the money put. I managed to collect a very good premium for this particular counter Beyond Meat. And because of that, I actually placed a trade on this day. Then too bad, each and every day it keeps dropping and dropping and dropping until I find a support line here, $160. But because my trade was placed at $140, so this is a very good gauge. So if the share price keep dropping and drop below $140, then I will lose the premium, right? I must cut loss. I must cut loss at 50%. So I must cut loss at 50%. I cannot allow more than 50% loss. Okay. So for this case, because the share keep dropping and dropping, I thought, you know, because it keeps on going up, finally there's an adjustment I wanted to enter because of the high volatility, good premium, but too bad it keeps dropping. So $160 to me is a very good support because the previous high was 160. So this can be the new support level. Let's see how it goes. If it continues to drop, I will cut loss at 50%. If not, then hopefully it will bounce back. Okay, so this day will be the day of announcement, and my expiry is actually on the 20th of November. I still have time. Okay, I still have time to see how it goes. So the moral of the story, don't be blindsided by the options premium. You see, I was blindsided. I was being greedy. I want to collect $115 premium per lot. That's why I entered this trade. I thought I entered very far out of the money, is very safe. But in fact, the real case to determine whether you want to enter into a particular trade, I think in future, if I want to enter in a particular trade, I want to make sure there's a show or sign of, retracement. Means it drops and then retrace back. It drops, I want to see a bounce back sign before I enter. So yeah, this is why I was being I was being blind spotted. I thought it's very safe, $140 very far out money, but in fact it didn't rebound. It didn't bounce back up. So hopefully it will bounce back up soon. Let's see how it goes, and then I'll update you again in my next trade session. Okay, so today I want to share with you one positions that I've exited because previously I did share on my CrowdStrike position, CRWD. I did mention in my previous video that I have actually placed one entry on the 31st at this price and at $121, second entry on the 13th of October at $148, and on the 26th of October, which is 2 days ago, I actually sold this entire position because there's a valid setup to sell. So it's I sold at $132, exited at $122. So I actually placed an entry here, and then I placed another entry here because there's a signal, a valid setup to buy, right? It's a system that I have subscribed to, and then I follow the system that I subscribe. I paid money to subscribe for the system. So the system setup is actually like that. And then over here, the system actually prompt me a sell signal. So I actually close the position here. So I made a small little returns on this particular counter, small little returns along the way. Small little returns, right? About 3% returns from this particular counter. So I have actually sold all my position on this counter, close all the position for CrowdStrike, waiting for another signal to enter. Okay, so that's all for today's sharing. Invest safely and capital protection is important. Thank you. And I see you again next week. Bye. Cheers.